Hello and welcome back to Coffee Infused Crypto. On today's episode is dedicated for all the bulls out there who maybe are feeling a little bit stressful, panic mode, maybe fear from the last markets update. So we're gonna rely on this saying, which is golden: whenever in doubt, just zoom out. So we're gonna zoom out, we're gonna discuss macro, and if you notice yesterday's video, we discussed the 200 weekly moving average and how significant that one is. So we're gonna deep dive into that and see where we are at the moment. I'm gonna give you all the information, and on this video, you're gonna make the decision. You're gonna tell me, where do you think we're gonna go next on Bitcoin? Okay, and for all the XRP holders, stick along to the end of the video because I have a brief TA which is significant for you, so you don't want to miss that one out. So without any further ado, let's grab our cups of coffee. Let's deep dive into Bitcoin macro. So first of all, I want you to know that we are on the weekly. We have the 4 moving averages: 20 simple moving average, 50, 100, and 200. Okay, so we're gonna go 1 year back in time and we're gonna move forward from there. Please note, those simple moving averages act as dynamic supports and resistances, right? So whenever a moving average is below us, it will act as a support. Whenever it's above us, it will act as a resistance. So with that in mind, notice I want you to focus on the 20, the white line, and the 200 primarily. Okay, so after we lost it here, 200 is above us, 20 is above us, so technically 200 will act as a resistance. And here on several weeks we broke out for a week or two, acted as ended up to be a fake out, and then we pushed further to the downside. Notice currently we have the 200 approaching the 20 approaching and crossing the 200, and now both of them are just approaching our price action. The 20 rejects the price action after for 2 weeks we tried to cross it, and that led into this massive red candle, and we went into this parallel channel. 20 above us acting as a resistance, and above that we have the 200. So at the bottom of this channel, which we could identify later on, we crossed the 20 eventually, and that led into 2 massive green candles. But next we have the 200 acting as a resistance, with the 50 crossing 200, and it acted as a resistance as well. We managed to cross the 50 and the 200 with one push. Now we have all 3 below us, and the 100 is acting as a resistance. So approaching the 100 and going back, testing 200. Where do we go from here? Notice that we have 20, 200, and 50 went all the way down. So doesn't this move here looks similar to this move here in relevance or in perspective of us approaching the 200 and then failing, and then approaching again and then failing? So aren't we technically here on this move approaching the orange, which is the 100, and before that failing and coming back, retesting 200? So every time we tend to move away from our moving averages, we tend to come back and retest them. So what's happening here? What is out of the ordinary? Again, I'm not gonna make any conclusions on this video. I'm just gonna show you that after we broke the 200 weekly moving average, we came back and retested it, and currently are doing so. Okay, so what do we have here? We have triple support. We have the 200 weekly, we have the upcoming 20-week moving average just moves relatively faster than all other three. So notice the curvature here. So the 200 is, and as we discussed earlier and in last video, was $26,044. Go back and check that one out. We highlighted that, and currently is at 26,117 approximately. So it moved, it ticked a couple of 50s, like to $100 up. The 20 moves faster and is currently at 24,651. So, and the bottom of our parallel channel, the one which we wicked to here and supported us here, is currently at $25,800. So, if you're in stress, if you're panicking, look at this and check what is abnormal or what is wrong with this price movement. If we go to another chart and just the same one actually, but go back in time, I just want you to I want you to focus on the fact that every time we tend to go further away from the 20, we need to come back and visit it and retest it. So the further we go in any direction, the 20 is the center of our move. Even when we hear that this move, or yeah, relatively it was a big move around this area. That was for multi-months, a couple of months, that was a 58% move. But in one candle, we tend to come back down in a 19% move to the downside to retest the 20. So 20, 200. If the 20 is a stubborn support or resistance, imagine what would the 200 be. I mean, the 200 has always supported us with this only exception and the COVID crash where we wicked briefly. So what are the pros and cons or risks and rewards? So if we want to analyze and put risks to rewards ratio, how much further to the downside do we have versus how much potential to the upside do we have, taking into note that those are below us and this is above us. So again, that's for you to figure out. And on the relatively, let's zoom in. We're still on the weekly, but this is what we were talking about earlier, right? This is our two parallel channels. You know this chart by now. So you know that ever since we started here, we tend to visit the top band of the first parallel channel, and when we lose it, we have the support as the middle, which is the middle band attaching to two channels. And if we lose the middle, we tend to either go to the middle of the lower parallel channel, or even we wicked here to the bottom. But what did support us at this stage? Was it the bottom of the parallel channel, or was it the 20-week moving average? Well, luckily, we have the 20-week moving average above the lower band of the parallel channel. We have the 200-week moving average above the 20. So, we're still on our targets. Personally, for me, the 20-week moving average is a solid support, followed by the middle of the parallel channel, which is on point, followed by the top of this accumulation, which we said about in the previous video, 25,338, followed by the 20-week moving average at 24,600 and moving up. So the bottom of the parallel channel, the second one, is technically hard to get currently. And as you can see, yeah, we wicked. I mean, I always keep this red line, which if I go on a lower time frame, it will indicate where my 200 weekly moving average is. And there you go, guys. Like, what is this? $5? Yeah, it's like what's like we touched the 200 and pulled back up. You need to have the macro conviction in your macro levels. Those are your bread and butter. Okay, for me at least. So what do we expect from here? A trading idea for you, and this is not a financial advice, definitely. But if we take the Fibonacci from the beginning of our move here, the dump, and all the way to the 200 weekly where we wicked at, you notice that easily that the 200 weekly, and this is like the 100 daily moving average coinciding anyways, but you notice that, and we've discussed this before as well, we always tend to move back to the golden zone. So if we had a move to the downside, technically our zero point 0.5 to 0.65 is a target of retracement. And then if that was pushed, then this would be considered a reversal, successful reversal. And or if that is resisted, or that zone resisted the price, and then we continue downward, then we might have a double bottom scenario or a lower price action where we had to the lower levels that we discussed. But on the short term, it is always and that's not so short, but this is on the daily, but you can expect a price retracement from here, a pullback all the way back up to a minimum of 0.5 Fibonacci level. So that can be an idea. Just keep and monitor how would the day close here, this candle, how would it close. The higher this body of a candle is, the more bullish we can get. And of course, if it flipped green, then that would be a hammer candle, and that would be very freaking bullish. But again, the market on the short term is not that bullish. We're having a lot of FUD in the market concerning liquidity of Bitcoin, concerning like market makers dumping some Bitcoin, concerning like the US government selling their Silk Road Bitcoin. So the short term sentiment of the market is a bit bearish, but we know the general trend, we know the macro trend, and definitely we know if we want to make money in this market, we have to think outside of the box and not have the herd mentality. So with that being said, I hope this Bitcoin logic and historical macro comparison did ease you a little bit and did refocus or did reset your focus on the price, on the big price. So always stay focused there. And I will repeat, just like in any previous video, every retracement before the Bitcoin halving, less than a year from the Bitcoin halving, any retracement we have is a discounted buying opportunity. Make this as your daily prayer as you wake up. Any retracement in Bitcoin is a discounted opportunity. So yeah, I mean, for me that was a beautiful accumulation, and of course yeah, I'm managing my long positions, and that gave me a little bit of a lower buy-in on that. But again, you do your own strategies accordingly. So this is for Bitcoin, and as for the XRP, I mean, you have to see this. So guys, this is the XRP versus Bitcoin chart. This is not the XRP USD, this is XRP Bitcoin. So let's go on the weekly. Let's check what do we have on the weekly. So let me remove this. And yeah, on the weekly we're having, I mean, the yellow one is, we're still far from it, so it doesn't matter currently, but we have this trend line here, okay, and this parallel channel. Those two I need you to focus. And this macro, yeah, this macro Fibonacci is from this low here to this high here. So this is the general view on XRP versus Bitcoin. And on the daily, notice, like today we noticed that XRP versus Bitcoin is plus 4%. And yeah, I was asked again, like, why did XRP is having a green day while other other alts are having a bloodbath, or the market's kind of having a bloodbath. And this is the reason, guys. So the reason is, from a technical analysis perspective, this is the reason. The reason is we're having this trend line on the BTC XRP chart, which is a was acting as a resistance, and this is a multi-week trend line. And yeah, here we wicked as well, rejected here again. When we crossed it at this area, if you notice, we had this surge, this pump, and again we came back, retested as a support, retested as a support, dipped below it, support, and flirted around with it. And as soon as we pushed up, I mean, this did boost, and currently we broke this parallel channel, and this is what I want you to see. So XRP versus Bitcoin is looking bullish right now. Okay, so technically this breakout means XRP has a potential to go to the upside versus Bitcoin. So if Bitcoin's pumping, XRP is pumping even more. Of course, what we need next is to technically do this. So close the day above, come back, retest. Okay, maybe just like slide alongside this parallel channel for a couple of days. But generally, on a technical perspective, if we didn't go back in, and again, even if we went back in, we have this yellow trend line acting as a support, and this would be a descending triangle here, even if we went back in, and that is a bullish formation. And this is a descending parallel channel. So the breakout from this will cause XRP's price to move. Today, tomorrow, next week, next month, we are, it's none of our business when. But what is our business now is noticing that the breakout from this parallel channel is very bullish for XRP versus Bitcoin, and a retest is awaited. And once we do, we have to monitor the candle and how is it looking on the daily, and based on that, we can fire a long or buy XRP or sell Bitcoin into XRP. So that would be moving assets. So again, we have this day might close below that, like retrace back below the parallel channel. Then again, still bullish, because the lower here we go, the more boost to the upside we have once we break out. And currently we are out. So on the 4 hourly, we are definitely out of this parallel channel. So this is on the 4 hourly, if you can see. So yes, we are out. So wick and this full candle on the 4 hourly. But again, we tend to, or we love to have the higher time frames for higher confirmation and bigger confirmation. So keep this on your radar. Big volume came into XRP, very bullish. I mean, the sentiment for XRP is kind of bullish lately, and everyone's waiting for the Judge Torres decision. So that's why we're seeing this decoupling, or maybe XRP gains against Bitcoin. So this can be a very beautiful, trading idea for you, or asset shifts from one asset to another. It's up to you, but always keep an eye on the BTC pairs, and currently XRP is looking damn good, breaking out of this parallel channel with in pairs with BTC. So that's everything for today, guys. Stay safe, stay focused, stay crypto, and definitely any dip is an opportunity, 1 or less than a year before the Bitcoin halving. Never lose that thought or strains of thought. Look macro, we're less than a year from the Bitcoin halving. Any dip currently is a discounted buying opportunity. That's everything for today. Thank you for tuning back in. I'll see you tomorrow. Bye-bye.